Good afternoon, guys. It's Market Wizard here. This video is an update to yesterday's short-term price action analysis. I was not planning to do a video today, but since we had some developments in price action, I thought it would be beneficial for everyone to give an update. So before I start with today's price action, I'd like to discuss a few things about yesterday's video, like a recap. So what we discussed yesterday is we had a confirmation of the deviation of the range. So this is our range high, this is our range low. Price went above and came down below, back in the range again on Sunday night. And on Monday, we made a video about the high time frame structure where we discussed about this deviation and how I'm expecting a sweep of the range lows at least in the coming weeks or days or months. And on Tuesday, it was around 91K yesterday here, where I said that I am expecting a relief bounce before we go back to range lows. I was wrong about that one, even though there were too many confluences at this level that, I mean, Bitcoin had every reason to bounce even in the short term before it goes back down to range lows. We discussed about the reasons. It was the 50 daily moving average, which sits around 90.3K. We had the 200 moving average on the 4 hour, around 90.6. We had this pivot level here around 90K, which acted as support and then as resistance and then again as support for almost 2 months. That was another reason that I was expecting a relief bounce. And of course, the funding rate, the negative funding rate that we had, along with the rise in open interest, which indicated that a lot of shorts were chasing the price down here. That was the main reason that I was expecting a relief bounce to squeeze those shorts out and then resume the downtrend. We also had the oversold RSI on the 4 hour. So where I want to conclude with this is that whatever, doesn't matter how confident you are for a trade, the market will always do its thing. So that's why we should always exercise risk management techniques. So in personally, I had a long at 91K, around this level, 91K. I had my stops at 89, so that was below the support zone here. So even though I was confident about the relief before lower, I had to exercise my risk management and I got stopped out of the long. That was around 2% loss. But yeah, trading is a risk management game. No one can tell you for sure what's going to happen. And this is why we always have our stop losses. That's the main thing that I wanted to discuss before I jump into today's price action. So what do we have here? We have We have lost all the key support levels with this daily candle close at 88K. So we've lost the 50 moving average on the daily. We've lost the 200 moving average on the 4-hour. We have lost our key support, horizontal support level here around 90K, which is the pivot low zone. We also had a loss in the bullish market structure, which is we had these higher lows, higher low, and we finally got our first lower low. So this is a change in market structure on the low time frames. Therefore, I'm expecting any bounce to be short-lived. So let's say that if we get a bounce from here, I'm expecting a lower high somewhere around 92, 93K, or even 94 maximum, and then back to range lows again. If you want to be aggressive, you can start shorting here, but it's a bit risky because the invalidation should be much higher. But currently, Bitcoin is having a bearish retest here of this support zone that we had. Now it's acting as the resistance, so we could start going lower from here. We don't need to have that relief bounce. So even if we have it or not, I'm expecting these to be tested in the coming days or weeks. And let's move on to Ethereum. As you can see here, we have the range highs, the mid-range, and the range lows here. With yesterday's daily close, Ethereum almost it managed to lose all the key support levels, just like Bitcoin did, which is around 3,000 and 3,050. This pivot level here at the mid-range, and also some key moving averages, the 50 moving average, and the 200 moving average on 4-hour. There is also a diagonal here that's also lost with yesterday's daily candle. And again, the market structure flipped bearish. So this was the first lower low that we had on Ethereum since November lows. I forgot to mention about the diagonal on Bitcoin as well. Here, Bitcoin lost its diagonal support, and it now looks like a bear flag or a rising wedge, which is a bearish pattern. This is another reason to be bearish. What else? I think that's all. I want to keep this video short because we discussed about the higher time frames on Monday. It's the video that's called Navigating Through Crypto Bear Market. So if you missed that, go back and see it, because it has a lot of information on why the high time frame structure is bearish and how I am going to navigate through this bear market. So yeah, I hope you enjoyed this video. Until the next time, see you guys. Bye bye.